Hi everyone, this is John Quiller here. I'd like to welcome everyone to Extreme Trading. Before we get started, I'd like to go through the list disclosure. So at least we're on the same page. Just to let you know that trading forex exchange and margin currencies are high level, there's risk, and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before deciding to trade foreign exchange, you should carefully consider your investment objectives, level of experience, risk appetite. Past performance is not necessarily indicative of future results. You should be aware of all the risks associated with trading foreign exchange and seek advice from independent financial advisors if you have any doubts. This is not a trade recommendation. Everything discussed on the Andrews at AIM is for educational purposes only. Only having to say this just to cover myself because I don't I don't want someone to start suing me or something like that just because taking horses or losing trades. So that's not the way to go. So I like to say I've taken a long break. I went for holiday and I haven't been trading for a long time. But while I was still on holiday, I was still doing high time frame trading in terms of forex trading. And I like to give everyone the opportunity to at least have one of my basic strategies that I used to uh, trade on the extreme trades, which we're gonna go through in a minute. So at least everyone have a better understanding of what it actually involves. It's very straightforward. We do know that the big sharks in the market make a lot of money trading a lot of extreme trades. So it's a good opportunity for everyone to be on the same page. And at least when I call signals, because I'm not going to trade for you guys, I'll be looking for the good setup. So all you'll be doing is just opening the charts, different time frames, and the setups I'll be sending you guys, they'll be right perfect. So no more staring at charts. Let me do the hard work, and you can clean the profits. So without further ado, let's get started. So we can go through the whole process of the extreme trading. All right. Um, what I've done, what I've actually done, guys, it's very simple and very straightforward. Instead of using the market live price, because that's a bit slow anyway, I kind of wanted to show you how it actually works. So, for instance, um, the trades you'll be receiving, the good trades that I want you to take are all the trades outside the IREG. So, the indicators list that you should have the HA, the candle countdown, which is your time anyway, the expiry, the magnified market price, that's the market price at the top, the pivot levels, these are your daily pivot levels, market opening time, the moving averages, the Bollinger Band, the rainbow MA, which is this moving average here, which is a rainbow. The TR, these are your swing levels, which are the red and the green arrows. I'm going to explain in a minute how they work. And the major forex reversals, which is this gray indy, and the IREG, which obviously looks like a TMA, but it's not a TMA, it's better than TMA. And the chicken cross the road. That's all you need, guys. And for instance, let me post this trade so I can show you what I mean by a good trade. So the first thing that you want to do is make sure that you know what consists of the whole extreme trade template. So this template here, the first thing that you notice is this one here, which is the IREG. This one is the main thing, guys. Which, if you trade in extreme trades, you want to be taking trades outside. What I mean by outside is, for instance, if you're taking put put trades, put trades. So the first thing you want to make sure is the price goes above the IREG, which is this level here. So that level there, if you see the double stack, for instance, if you see the gray and the red, which obviously the red represent the swing levels. And if you're on the M5, your higher time frame, which should be the H1, should determine your swing level. So this is a good trade because this is a good swing level down. So if you mark it down like that, yeah. So I'll show you how to enter the trade. So this trade could have been right in the Bollinger Bands. These are the normal standard Bollinger Bands, which is deviation of 20, um, which obviously you can see the price is right at the bands. What you have here is the moving average. This indicates the trend. So this indicates that the trend is up. So when you're doing extreme trades, just know that you're trading against the trend. And as many traders say, which is accurate anyway, the trend is your friend. So you shouldn't trade against the trend. But when you're doing extreme trades, anyway, you'll have to trade against the trend because you want to maximize the profits from the major reversals of the most extreme levels. So how to determine the extreme levels? You don't want to take any trades within close to your major 50 MA. So for instance, this trade here is only 9 pips away. So that's not a good trade. So you want to be looking trades more than 10 pips away. So for instance, this trade here is about 21 pips away. Indicates a very good potential trade of the trade reversing back to the main moving average here. And obviously anything close to the 50 moving average, that's a breakout strategy. So today, we're not going to cover the breakout strategy, just focusing on the extreme trade. This trade here, you'd have entered this trade because you fast swing. Even if you enter at this level, you still win with a few candles. This is on the M5 time frame. So half an hour down, you still win this trade, doing a reversal swing. But to maximize the profits, you want to be taking this trade here because if you have a look all the way down, is a double stack. So you have red, gray, and if you look all the way down, it's not perfect. It's not a perfect example because how you use the chicken cross the road, you want to make sure that the red indicator is above 90. So that should be a good entry point in terms of striking entry point. And as you can see, as soon as the chicken crossed the road, when it goes below the blue and is above 50, that's a good entry level because the price is coming down. And that's the reason why you see this action here. It went below the blue and it went all the way down. And as you can see, the blue, this is the main road. It keeps on sliding down towards the 50 line. So when it goes below the 50 line, it indicates the trend is down. And if you have a look at this stage here, when it went below the 50 line, if you mark it up here, just move it a bit. There we go. This is when the rainbow MA was trying to break the 50, but because you're doing extreme trades, you don't want to be taking trades around this level. All your trades should be around this level. If you're doing an FX trade, then you should be moving a stop loss towards this level and trying to exit right here around the 50 MA because what you're going to realize is the price will bounce back off the 50. Sorry about that. That's different indicators. Yeah, so that's the main thing, guys. So if you're taking a put trade, first thing you want to make sure the price is above the T is above the IREC, and obviously the good trades you want to have them double stacked together. And the other thing you want to make sure that the chicken cross the road, the red MA is above the 90 line, which is the 90 level, and you want to make sure the blue is sliding towards the 50 line. That's it. Then for the other opportunities for trading call trades, I mean we can have a look at different setups anyway. So I'm just gonna kick it back and start moving the strategy tester before so you can see. Right. So as you can see here, we have another double stack there. Right. One thing you're gonna realize, guys, is the gray indie will always shift within a short period of time. It won't shift here now, But if the price was to retrace down below this level, it will obviously shift because it's a new low. So it was here before, and as you can see, you could have gained a potential. Uh, you know, uh, if you traded this trade here for an FX trade, you could have gained a few pips here, just trading up to this swing point there. And if you trade to this double stack here, if you just enter the call trade here because this is below the RX and is a double stack. If you have a look, is a double stack all the way down, double stack. Yeah, double stack there. And the first thing you realize, when you go down to the chicken across the road, you have red. Red just came off, almost touched the 10 level, below the 10 line. So this is a good entry point there. Touch the 10, and you exit. Your exit for an FX trade will be here. And those guys are trading binary option trades. You take half an hour. If you do take 1 hour, it should be ITM anyway. So this and exit your trade or your next swing low, swing high. Sorry, swing high there. So you'll be exiting there, and your entry level should be there. So and as you can see, the chicken across the road is sliding towards the 50 line. So that's a good indication that the trend is changing towards the 50 line. This is a good entry because you can see that the chicken across the road is sliding towards the 50 line. And if you have a look, there's another one there. Plenty of good opportunities to be traded, guys. I mean, if you just take all the trades outside the RX and be patient, because the first one will fire, and you have to hold on and take these. You have to wait for these signal, which is a swing low. So these are swing. These are your lower swing low, which is very good entry here. And this trade here, you can either decide if you want to enter, if you want to hold on to your price, hold on to your trade. I wouldn't advise it, but you can enter that trade and you'll be looking to exit your trade on the next gray there. So you can enter there and you can move your stop loss with the swing levels, but is a risk of the trade hitting the 50 moving average and reversing down on you. It's better to take profits there and wait for the next trade because you can always take this trade down. I wouldn't recommend take this trade because it's not outside the area. So trading this template is very easy, very understandable. The reason why I gave this template away, I've used it. I used it a lot to make money, and I wanted to be generous. I want to help those who obviously. I mean, I've given some very good indicators here, especially this indicator, which is the swing levels, is very accurate. As you can see, does a repaint is accurate within the swings anyway. And if you combine this together with the gray, it is actually perfect because every time you see the gray and then is followed by a red is a very good indication the price is going down. So have a look at that one. That's a very good double stack over there. And entry level could have been actually let's your entry could have been there and your entry could have been on that level. You see? That's a perfect double stack there, and you got another double stack. So you got two very solid trades over there. So it's very easy to follow, guys. So I mean, it's only for the extreme trading. There's a lot of details. There's a lot of things I can explain about the bullish bands and about the MAs, about the 50 line. But for now, because we have a long way to go, I just wanted to trade the extreme level. You can make money off this. You can make a lot of money off this anyway. And just remember, your chicken cross the road. The way to trade it is a guideline for your entry level. If you're looking for an entry level, you should go with the chicken cross the road. This should give you an entry level. For instance, this level here, this could have been a nice swing. But have a look, it's not outside the RX, so it's not a good trade. But this trade here, it is a perfect trade because it's outside the RX. Obviously, it's next close to the 10 level, and the other thing what's going to happen now, because this is sliding off 50 and it's sliding up, is going to, the trend will shift up. Have a look at the 50 EMA, you just shift it up. And the same case, one trade, one trade, one trade. Have a look, same thing happen again. And this trade, if you have a look, you can see this level. You can see from this level, it gave you an entry. It was a close entry there, but you had to wait for the trade to be outside the RX to take the entry. All right, for a good definition about the swing levels. Just looking at a plain chart here, guys. This is New Zealand USD on the M5 chart. I think you want to write this down. If you're doing binary options, binary option levels, the binary option levels. If you're trading the M1, your major level should be the M30 and above. If you're doing the M5, your major level should be the H1 and above. If you're doing M15, your major level should be H4 and above. If you're doing M30, it should be the same H4 and above. If you're doing H1 trading, your major level should be on day one. And if you're doing H4, it should still be day one. If you're doing day one, it should be week one, and week one should be 1 month. Okay, so what do I mean by that? What I mean is, for instance, this trade here, these major swing levels have been determined by, because on the M5 is being determined by the H1. So if you go to H1, right, let's just go to the live price. So for your major levels, the first thing you want to be looking at is marking down your major swing level. So that's a major level there. And your lowest major level is there. And because this major level, that major level has been offset by this major level, so that's not a major level. But you can still put it down as a major level. Yeah. It's just a rough idea where your major levels are. Then this is not a major level because it's too close. So these are your main. If you go to the M5 now, yeah, just going back to the M5, you see you can see all your major levels. I mean, the price looks. Um, this is on the M5. You can see that's it. But you can see that is actually accurate because you can see the first thing that you drew your major level. You can see the swing levels here, and you broke this major level, went over, and have a look is a very strong support because this is a very strong major level. So we're gonna be looking at the price reversing at this point here. If you draw another line, you should pay close attention because this is actually the live price anyway. So you should pay very close attention to this major level because what's going to happen is either you're going to experience another major level break here, or it's going to break the same way that it did here. So because he has actually tested this major level once, if the price goes above this major level within 2 candles, you'll be looking to go call because obviously it's broken. He has actually broken a major level. If you go back to the H1, uh, that's the trade there because that's the live price. So you can see this is a major level being determined by this swing low here, right? And you don't have to go back like maybe the whole chart. All you need to do is maybe one, maybe four, five steps back. That's all you need. That's it. Determine the major level. So if you're doing the M1 the M1 time frame, it should be exactly the same thing. You should be looking at the M30 for your major level. So if you're doing M1, you should go to the M30 time frame and plot all your major level, all your swing levels, so all your swing highs and lows. This is the H1 price. If you go into the M5, because this is a major level based on this level here. So we are looking for a reversal based on this major level was a breakup. So because the price is coming down and the price is consolidating around area, it's more likely for the price to be shifting back up. So what you're gonna do on lower time frame, as you can see, is just wait for a few confirmations for you to go take an entry. And that's what you have to do. Moving back to our template, you can see there's plenty of opportunities. There's one more trick I was gonna show you guys, but for that one, I wait until everyone has actually mastered the template. As you can see, this trade coming up should be an extreme low trade, and your entry level should be around this level, around that level there. Going up when it went up to close to 95, and because the blue chicken across the world was shifting, that's going to be a short entry there. And because the gray is not there yet, it's not a strong trade, so you need to wait for the gray. So if we can just for a few minutes, just hold on and just wait for a gray trade, and I'll show you what I mean for an extreme low trade. And of course, give us your feedback for those guys who's gonna make a killing. Thank you very much for making a killing, and give us your feedback. And I want everyone to be active in the chat. That's the cost of being there. So if you're not active, I know who you are. You know, I don't want to see multiple posting of winning strikes, no explanation at all as to why you took the trade. I mean, most of the traders are here to learn anyway, so it's better for you to say, I've got a trade coming up, setting up, and post the trade after you win or lose. We're not here to do glory hunting, so we're not here to seek fame. At the end of the day, you know your account balance. If you know you're taking horses, just keep on taking horses. But if you know you're taking winners, just encourage those taking losses. Then just show them they can win. And everyone was born to win anyway. You just have to practice and be patient. That's what it is. And I'm glad I took a nice break, fully back now. So for all my, there's a great trade coming up. So that's the trade you should be watching out for. Double stack two. So this trade, the good thing about it is once it becomes a double stack anyway, is a very high chance that after this swing low, which does repaint anyway, it is a reversal. Even if you take it for a few pips, is good enough than nothing anyway. So the trades you want to be watching out for, this trade here is gonna go down because there's one trick I'll share another time. This trade here will retrace all the way down big time. This will fall. This will actually go. Is actually going to retrace down big time, all the way down, going down. Even if you take your entry there and hold on to your price, the price will go down off the 50 MA. So I hope you enjoyed the template and you enjoyed the trading. And for more information, if you have any queries and you have any troubles, just show me a message on Skype. And I look forward seeing you winning. And happy trading, guys. This is Young Kula here. Take care for now. Bye for now.